Gold, gold, gold. Analysts are optimistic about gold now that the Federal Reserve has shifted towards accommodative monetary policy. And with the recent conflicts in the Middle East, analysts are also focused on gold's value as a safe haven. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. Metal strategists are now buzzing about the Federal Reserve's recent 50 basis point shift back to accommodative monetary policy. Several analysts see gold climbing as high as $3,000 per ounce next year, largely on the strength of a renewed cycle of interest rate cuts. Mostly, but not entirely. Another projected source of gold price support is continued geopolitical uncertainty. Analysts at Goldman Sachs recently said they're looking for gold to continue to rise through at least 2025, naming gold as their preferred near-term long and citing the metal as their preferred hedge against geopolitical and financial risks. For anyone unsure how geopolitical risk affects safe haven assets like gold, last week provided a textbook example. In the latest explosion of tension between Israel and one of its principal adversaries, Iran fired roughly 200 missiles into Israel as a proclaimed act of revenge. The attack last Tuesday triggered a very clear and very illustrative reaction in both financial markets and gold. All major indexes dropped that day. The tech-heavy Nasdaq Composite dropped most of all, tumbling 1.5%. And gold? Gold rose as much as 1.5%, ending the day up about 1% last Tuesday. As far as New York-based metals trader Tai Wang was concerned, there was only one reason for gold's strong upward move that day. It's instinctive safe haven buying. The instinct to buy gold during geopolitical crisis has proven itself time and again. From the beginning of February 2022, as Russia was prepping to invade Ukraine, through the month that followed, gold jumped roughly 13%, even briefly crossing above $2,000 per ounce. Silver was no slouch either, surging 14% on the upheaval. Analysts predict that gold will continue to perform as a hedge against future geopolitical unrest. The world's single largest asset manager, BlackRock, recently characterized as high the probability that each of the following risks could be realized. Tensions between the U.S. and China escalate meaningfully over Taiwan or in the South China Sea. The war in Ukraine becomes protracted, raising the risk of escalation beyond Ukraine. Regional conflict in the Middle East escalates, threatening energy infrastructure and increasing volatility. A terror attack leads to significant loss of life and commercial disruption. It's not the most optimistic outlook. I understand that. But here's the silver lining. Just like central banks and large investors, you have access to the same precious metals to help protect your portfolio. Remember, geopolitical events do not discriminate by portfolio size. It's worth considering adding assets that have historically strengthened during crisis. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.